James Higher with this week's Autochartist weekly Forex futures and equity market recap for the week ending July 13th, 2012. A weaker than expected U.S. non-farms payroll report on July 6th encouraged the selling of risky assets, sending investors into the relative safety of the U.S. dollar. Based on the strength of the momentum, we are looking for a possible rally to the upside. Now, we did get it for several days, but then by the end of the week, the dollar weakened and the Canadian dollar got stronger, and the market ended on a weak note. The next day, we were looking at the Comex Gold market. What we saw there was a triangle chart pattern, and this drew the attention of traders looking for either a major breakout in either direction or a continuation of the down move suggested by this emerging triangle chart pattern. We said that gold has been one of the most difficult markets because of this triangle formation. Also because fundamentally investors don't seem to know whether it's a reserve currency or an investment. So each time it gets cheap, they buy it. When it gets expensive, investors sell it. At the same time, the stronger dollar has been putting pressure on gold, but this hasn't lasted, and you can see that we are going into this sideways choppy pattern. We could either still break down to the through the support line or back up through resistance. So this remains one of the choppiest markets for the week. We also looked at the cash gold market, and that had formed in a descending triangle chart pattern, and this too shows that there's clearly support going all the way back to December of 2011. This is held several times. This area is attractive to the investor who looks at it as a relatively cheap price compared to these previous highs way up here in the 1700 area. But you can see that there's strong enough resistance in a series of three tops that's stopping the market from rallying and getting stronger. So we're going to continue to say that based on this triangle formation, that gold is headed for a very volatile period. Once it decides to break out and make its move, I think that traders are going to jump on this breakout because of the frustration of this sideways pattern. So be prepared for volatility to hit the gold market soon. Now, later in the week, we saw a shift in the sentiment in the marketplace. We saw a stronger dollar and weaker demand for risky assets, so we started to see pressure in the New Zealand dollar, and we are looking for the start of a serious decline in this Forex pair. We saw that it met resistance, and again the size of this triangle pattern here was 194 candles, so all eyes are on this chart because there's so much history. However, we need to see if we can get follow through to the downside to keep this emerging downtrend intact. Now, Friday we saw a strong recovery in equity markets and a big sell-off in the dollar versus the New Zealand dollar. So we'll see if there's follow-through rally on Monday, but otherwise, if that's just a one-day event, then this trend should resume again this week, and we should look for weakness in the New Zealand dollar. The Australian dollar was another market we looked at, and this market showed that we had potential to again break down to the downside. Very similar pattern to that New Zealand dollar pattern. Again, this rally here was driven by speculation that central banks would provide stimulus. When that didn't come about and the US dollar got stronger, the Aussie began to weaken. Again, on Friday we saw a recovery in the Australian dollar that could put upside pressure on it Monday, but as long as it remains under this 103.24 area, we could see a turnaround back to the downside. So going into this week, it all depends on the position of the dollar. It looks like if the US dollar turns around and picks up the strong move that we saw earlier last week, then the Australian dollar, New Zealand dollar, and the gold market should all feel pressure, just like we saw for most of last week. Now Friday there was a very big rally on speculation that central banks were going to provide some form of stimulus, especially the European Central Bank and the Bank of England. Traders were getting a little restless in the euro, British pound markets because of oversold conditions. So we're going to look at it in terms of demand, and it looks as if that rally on Friday was due to speculation as well as oversold conditions. So we'll see if we can get a follow-through rally next week. Again, if we do, then the US dollar should weaken, equities, gold, and currencies should rise. This has been James Hierchek with the Autochartist Weekly Forex Futures and Equity Market Recap for the week ending July 13th, 2012.